Drop. you Drop. Drop.
All right. How we doing, everyone? Welcome to the stream. My name's Leo. I'm 23 years old. I'm a full-time day trader. I've been trading full-time now for just over 2 years. And Atlas kindly invited me to jump on a live stream, share with you guys my market analysis, my approach to the market, live executions, Q&A sessions. And ultimately, this is going to be a balance of not just live trading, but an opportunity for you guys to network, meet some like-minded people, and hopefully take something away after joining the stream. In terms of today, the stream's going to look pretty simple. Again, I'll do a little bit of a brief introduction about me. I've had a few questions inside of the Discord, as you can see already, about my trading. So we're going to be running through a little bit about my trading. As well as that, we're going to be running through today's analysis. That's the primary focus, is focusing on today's price action. And we're also, as a little bonus, I thought I could take you through some things on deep charts, which if I work out how to change the stream on YouTube, we should be able to run through that. If you are on YouTube and you want to tune in to the Discord, where we are streaming deep charts, as you can see here, again, you are more than welcome to do so. With that being said, let's get on with the questions and let's kind of dive into what's going on in the stream. So let me just see. Perfect. I think McDaniel sorted that for me, so thank you. Cool. So I think somebody asked, we answered the best platform, a little bit dive into how I actually trade with the NASDAQ. So primarily for me, I am a scalper, primarily trading the NASDAQ, and I use the S&P 500 as a correlating asset. So if I kind of just strip it back, for anyone that doesn't know, futures markets are designed to go up in the long run. So if I come to a daily chart and I zoom right out here, over the course of, time, you can see that this asset is just on a consistent uprise. Okay. Now, this is why I love futures markets, because especially as a scalper and having the context of knowing that you're trading an asset that's very trend dependent and very strong in terms of volatility. You can see here on a daily candle, daily time frame, we're getting consistent bullish prints. This is a sort of asset that I want to trade. It's predictable. It's easy to read. It's easy to understand when we're going through periods of uncertainty and periods of certainty. And those periods of certainty is where we really sort of capitalize as scalpers, but also, traders in general. You will naturally perform better in markets that move with very strong sort of movements in one direction, compared to trading something like, let's call it, Euro USD, which is the most traded forex pair in the world. If we come to a daily time frame, well, you can see it very rarely goes through these periods. I mean, we're coming back here. This is going back all the way to, the start of 2025. And all it's been doing all year is going sideways. Oh, I'm not too sure what's going on with my screen there. But you can kind of see, and you can kind of paint the picture of why I decided to choose futures markets over forex, because the read on the market and the way to approach these markets, in my opinion, are so simple. And once you learn to master this asset and you can train your eyes to see these things, trading becomes 10 times easier. So I only trade one asset. It's the NASDAQ, not focusing on anything else. And over staring, I mean, I can't even tell you how many hours I've got staring at this asset. But over time, you sort of train your eyes to see things. And I like to think I've done that with the NASDAQ. Now, in terms of today's session, if we take a look into just the lower time frames, we'll jump into a 15-minute. We'll kind of paint the picture. If we just see if I move this onto my, okay, that's fine. We can do that. So full screen this, put this onto the NASDAQ. Cool. So we'll kind of paint the picture here. So I want you to pay attention to this first. This is the Asia range. Okay, so this is the start of Asia. And obviously this is the end of Asia. And you can see currently this sets at 162 points. Now, the way that I trade is I primarily focus on session liquidity. Where's price likely to draw to based on the targets in price? And is it seeking balance? Is it going through a period of, consolidation? Are we, seeking something? These are all the sorts of questions that I kind of ask myself, which again, kind of come through experience. So the first thing that I did come into London session was I marked out the Asia high and the Asia low. Some of you may know me for the guy who trades Asia sweep. In terms of the Asia sweep today, nothing high probability showed. You can see that we swept the Asia high. My thesis is would then come down to the Asia low, but price lacked delivery and volume, and you can see we just went sideways all session. Then I kind of expected this because we had NFP, obviously with it being the first Friday of the month, big news event, and NFP released a pretty decent candle, sending price higher. And ultimately what it left behind is what I call a data wick. Now, a data wick is a wick left from a news event, to put it simply. It's pretty simple. Oh, did my Discord just disconnect? Wait, are we good? Yeah, I think we're good. Nah, I think my Discord crashed. Yeah. All right, we'll jump back on the Discord. My Discord just fully crashed. Sorry about the technical difficulties there, guys. There you go. Just quickly load this up for the guys. There we go. Sorry about that, guys. My Discord decided to crash. Let me jump on the screen share. I'm gonna get started. Beautiful. Cool. Yeah, I think I might have lagged out there, Pranav. I'm not too sure how long I lagged out for. For those on YouTube, you'll have caught it, so that's absolutely fine. So yeah, as I was mentioning before, obviously we had this data wick below. This data wick is a very strong draw of liquidity for price, and data wicks, according to previous data, they will get swept about 90% of the time on the same day the news is released. So if we come onto a 1 minute time frame, for example, this is my sort of read coming into market open, and it's nothing crazy, right? This being our data wick, this also being the high of the data wick. You see that? So we have the high of the data wick and we have the low of the data wick. Just turn off these levels. So once we sweep one side, I'm expecting a sweep of the other, exactly like the Asia sweep. You see how we sweep Asia high? I'm looking for a sweep of the Asia low. Well, it's the same thing with the data wick. If we take the data high, I'm looking for the data low. And the timing of this is pretty convenient. Obviously, this was pre-market. And this kind of aligns for a decent reaction pre-market or coming into New York session to actually seek this area. And ultimately, that's kind of what happened. And that was the kind of move I was looking for today. Ultimately, there was no trades for me. This was really choppy, horrible price action. But that's a pretty basic overview of how I trade using areas like this to kind of validate my areas, my targets. And I also kind of dive into things such as gamma levels as well. I'll go into these another time because these are very in depth. But I can leave them on screen for today. They basically can be used for finding key areas in price and looking specifically where price is going to react from. What I'll show you is when price comes into this area, I'll jump onto deep charts on the order flow thing, and you can see what happens. It's kind of fascinating. How are you determining the data lines? So check when the news event is released. Obviously, NFP was released at 1:30 today. You can come onto a 1 minute candle. Oh, sorry, a 1 minute time frame. And then once this 1 minute candle forms, just mark out the high and the low of the wick. And then if one side gets taken, you can expect a reversal to the other side. It's a very strong probability. It's not likely to flush straight directly there, but if you can find an approach to build a model to get short, to the data wicks, then you can be in a pretty good position. So you can see here we're currently trading through core resistance. And look at that momentum. It's quite aggressive, right? If we take a look at what happened on order flow, can you see the amount of aggressive orders that we had? So we had a seller at 129 contracts, seller at 47 contracts, and we also have aggressive buying here. We're trading at the VWAP. Yeah, this is where things get exciting. We're going to jump on this chart for a little bit, and we're just going to analyze price. It's streaming on YouTube too, which is good. So yeah, we're going to stick on this chart for a little bit. And we can run that. So you have a strong chance that a reversal will occur, correct? Yeah. A market reversal to the other side, it happens about 90% of the time. A lot of my data is backed by Edgeful as well. It's a company that you can kind of collect data on pretty easily when it comes to things like data wicks and things. Edgeful is great for that. So as you can see here, this time frame, you may be thinking, what's going on? These candles are printing quite quick, and like they print at different times. Like what's going on here? We're actually on a 40 range. Now this isn't a time-based chart. Okay, this is a price movement-based chart. So like a time chart, every minute it will print a candle. Well, every 40 ticks, this will print a candle. So every time price moves 40 ticks, it will print a candle. 40 ticks is about 5 points. Just for reference, 5 points is it's about that size. It's a pretty small movement. You can kind of see it there. So every time we get this sort of price movement, it will print a candle. This is pretty in-depth and very precise level entry when it comes to scalping. It's a really good time frame for kind of catching initial reactions off candle opens and things like that. Again, there's so much more to my model. I do have a YouTube channel as well if you guys want to check out what I do. It's literally just my name. I've recorded some videos in terms of the models and the way I trade. Done a bit on order flow as well. I don't sell a course or anything like that, though. All my education is currently free. So you can see here that this little box that we're reacting out of, this is what we call an effort zone. Okay, effort zones are, as they say, really, green being buy effort and purple meaning sell effort. So you can imagine them as like the way that I would treat them is like a fair value gap for those that know what a fair value gap is. You can expect price to kind of retest these areas and have reactions out of them based on the color they are. This is essentially representing buy effort. There's a lot of stacked buy effort in this area. So if we pop into this, you can see here that buyers are really trying to fight it. If this runs through aggressively, this could look really nasty for buyers and we could sell even lower. But you can see here that buyers are protecting this area. So based on this information here, you can kind of anticipate, well, we might have a little pop up, but you can see there's no aggressive orders. We want to see numbers. You see there's no numbers here, but there's numbers here. When there's no numbers, there's not a lot of volume or like there's no big boys getting involved. We want to get involved with the big traders. That's where the volatility comes from. And this is why this tool's great. Because while you're looking at, a trading view chart and you're going, oh, this is a nice 1 minute close. We've got a great break of structure. All you're seeing is a 1 minute candle. There's no information about this candle. And then all these break of structure traders now will go, oh, no, I'm in drawdown or whatever it may be. But with deep charts, I get information about every single bit of this candle. Every single bit of that 1 minute candle I get information about. So while these guys are getting short off the breaker structure, I can see this and go, well, actually, we're currently trading at the VWAP. If we can get a bit of an acceptance lower, now we should flush. Because now you can see we've gotten below this aggressive sell effort. I'd expect a bit of an aggressive reaction. You can see buyers are trying to hold it here. Overall, I am bullish on this asset. But as a scalper, I can kind of predict in the moment what's likely to happen based on the information that's being shown to me. And that's what I like about scalping is, it's not like, oh, the daily time frame looks terrible, I can't trade. It's like my job is to react to price. It's not to predict what price is going to do. So you can see here we created the sell effort zone. Again, kind of insinuating that sellers are really trying to protect this level. And again, I want you to pay attention to this area here. I'm going to draw this out in a little yellow box. I'm going to explain these very quickly. This is super simple. This purple 129, that is a seller at 129 contracts. This green 50, that is a buyer at 50 contracts. That green 74 is a buyer at 74 contracts. And there's a seller there at 47 contracts. That's all it is. It's just orders, right? And it's a indicator that it's an indicator / setting that when these orders come in above 30, it will show me. So any big orders above 30, it will tell me when they're getting involved in price. And you can kind of see it. It probably won't be great on a day like this because it's been NFP. But you can sort of see, we get a trapped buyer. If he's forced to close his position, likely going to be a flush in the opposite direction. We have a seller here. He's most likely going to hit stop loss. He's going to be forced to close his position. We can expect a flush in the opposite direction. Buyer trapped at the top of the move. We get a bit of a reaction. This guy is tanking drawdown right now. He's going to be forced to close his position. We get a flush in the opposite direction. And that's what you call absorption. So what I'm looking for here, based on my thesis of, price potentially going short for the brief period of time, is a trapped buyer not get rewarded, him have to close his position, and then I can expect that flush lower. It sounds probably more complicated than it actually is. When you see it in real time, it's it's good. Because the 1 minute time frame is a time-based chart, mate, and this is a price-based chart. So this prints a candle based on every 5 points price moves. So every candle is the same size, if you couldn't tell, wicks included. Every candle is 5 points, and it's really good for kind of predicting, getting in those reactions. And because I can see the orders that come in on such a lower time frame, I know when the volume's going to kick in based on that information. Right now, there's nothing. We're just going sideways. If we look at it from a trading view perspective, all we're doing is, we're sort of in a balanced price range. Buyers and sellers are equally, sort of auctioning right now. No one's really getting rewarded. Currently looks good on the buy side, but again, you can see every time we try and make a new high, price is rejecting. So either we'll use this as liquidity or we'll reject again, I think. I think we chose the worst day to start a stream as well on the NFP. When the price action is just likely to go sideways. At least next Friday will be good. For sure. We'll jump back on the deep chart stuff. It's good because I can kind of live commentate on this and call out moves in real time. So as I mentioned before, these are the kind of highs that I marked out on TradingView. Every time we're trying to make a new high, we're currently failing. And you can see stacked effort zone, we tap into it, we sell off. Effort zone, we tap into it, we sell off. Effort zone, we tag into it, we sell off. Now we haven't got the sell effort zone yet. So if we create another one here, there's a good chance that we could at least come back down to this area. But for as long as buyers are pushing and there's no purple boxes, we're most likely going to revisit this blue line here. This is the value area. That'd be interesting because if we get above the value area, we've already failed the auction once, so I'm not too sure if I'm expecting higher pricing just yet. We'll see. We'll take a little look on TradingView. This is my initial balance indicator. Initial balance is one of my favorite models. I've got months of data on this, years of data on it. For those that know me on YouTube, you've probably seen it as this. This is like pretty much all my data on it. I've got 5 years worth of data on this model. On days like this, where the market sentiment is overall bullish, but we're not really delivering, it's really good for these sorts of breakout trades. So right now, I don't think I'm going to be taking anything based on where we are. It doesn't make sense for me to get involved based on us trading 50% of the range. Again, I think this is a skill that comes through experience, especially trading an asset for so long. But we're currently sat pretty much directly at 50%, and with no side of the market is getting rewarded within premium or discount right now. And you can see, since we tapped into it, all we've done is consolidate. It doesn't make sense for me as a trader to try predict whether this is going to go higher or lower. My job in this situation is to go, right, what would give me a confirmation that price wants to go in X direction? And this is where the initial balance comes in. So we have the high and the low, and I'm going to simply wait for price to break out either side before I do anything. That's going to give me a bias. And if you're curious to see the stats based on that over the last 5 years, when we break out the high, 70% of the time, that's 1,290 days, by the way. It's 5 years. So 70% of the time, when we break out the high, that's it. We're only going to break out of one side, and that happens 70% of the time. I mean, if we break out this area, there's like a 30% chance price is going to revisit this area, but it's actually lower when you combine it with all the other kind of data packages and stuff. It's like really interesting. I'm a proper nerd over this stuff. I'm not going to lie. I could talk about it for hours. Wrong day indeed. Yeah, tough day, man. Tough day. Do you trade yourself, McDaniels? I'm curious. Yeah, you do. Nice. What's your kind of go-to? Mr. Yandri, we got Mr. Yandri on the YouTube. Love to see it, bro. You can join the Discord, by the way. I think there might be a slight delay on the YouTube side of things. So if you want to jump into the Discord, you're more than welcome to. You're a gold trader mostly. Interesting. You Fibonacci trader? I know, Fibonacci gold is pretty broken. And how about you, Pranav? You've been quite talkative today. I presume, based on the questions you're asking, I think you've probably got a basic understanding of trading. I think maybe you are at a phase of kind of looking to expand your knowledge. I'm happy to be wrong on that one. Yeah, I use the Fib tool as well. Yeah, nice. Yeah, I used to use the like 0.618 level, 0.79 level fib on gold. It was pretty broken. Yeah, what do you prefer, NAS 100 or S&P? Nasdaq all the way. 100% the Nasdaq. Nasdaq's the one I've got the most data on. It's the most traded asset in the world. The volume's perfect for me in terms of the way that I scalp and the way that I trade. And I've also stared at this asset for probably over 1,000 hours, and it's the one that I feel like I'm most comfortable reading. There's not too much of a difference, believe it or not, trading between Nasdaq and ES. And it's a question I get a lot, like, why wouldn't you trade the like ES? And the simple answer is that I don't need to. I've only ever traded the Nasdaq, and the results I've had are brilliant. I don't need to change anything. And I think if I then try to add another asset, it's only going to cause problems. But I look at ES every day. And in fact, I spend a lot of time looking at ES because it's a correlating pair with the NASDAQ. It doesn't look like it right now because the price action is terrible, but they are supposed to be correlating assets. And that's where tools such as divergences and that can signify market reversals can be really, really good. Really, really good. You're not that advanced. Your dad does forex. Interesting. How long's he been in the forex market for? You want the Discord link? Let me see if I can put it in the chat. Hang on a second. Good question, Yandri. Let me see. Don't think. Can I do it in the private chat? Maybe. No. Ah, legend. Someone already did it. Around 20 years. That's amazing. The fact he's been in the forex markets for 20 years. I bet he's seen some stuff, you know. I bet he's seen some pretty crazy things happen in the market. And he's like witnessed the evolution of trading as well. From what it used to be to what it is now. I remember MT4 being the brand new, like, oh my god, MT4, this is amazing. And now we have like literally you click and you just drag. It's like so simple. Makes me wonder where it's gonna go. Yeah, but he doesn't do G10. He does the lesser volume ones. Okay. Okay. Yeah, I mean that's the thing with forex for me. It's very manipulated, and it's kind of it's the way that I see it. Forex is like shiny object syndrome. It's perfect for people who have CPAs and broker deals and things like that to kind of go into all the forex space because it's so accessible to everyday people now. People can sign up to a forex broker within 3 minutes, and I think that's the issue for me with the forex space is it's way too accessible to everyday people. It's just institutions manipulating price. It's designed to hold a stable value. It's designed to go sideways. I'm not interested in trading markets that are designed to do that. And the fact your dad's been doing that for 20 years, and if he's seen success, then do you know what? Massive respect to him, because not many people survive 5 years, let alone 20. Sounds like you've got a potentially good mentor. That's pretty cool, though. Actually, I feel like I'm speaking to my son because that's gonna be my son one day. He'll be joining a Discord server. Like, yeah, my dad trades the Nasdaq. He's been trading for 20 years. He's an order flow trader. All he does is lose, but I can see that happening. He doesn't know crypto or futures at all. Does he need to though? That's the thing, right? Like your job as a trader isn't to understand every single concept and everything that goes on. It's your job to kind of find one thing that really suits you as a trader, suits your trading personality, and being able to hone in on that. Don't focus too much on the noise. Don't focus on what other people are doing. Focus on you. And I was very lucky. I had a mentor who'd been trading for, 12 years, who taught me a lot of the things that I know today. Unfortunately, we don't really speak anymore. We kind of ended on bad terms, but yeah, find someone who you resonate with. Find someone who actually knows what they're talking about, and they're not just marketing through, Instagram campaigns and stuff, and hone in on that. You'll probably adapt to most people do. I don't think trading is black and white. Like, I could give you my trading strategy. You could trade it for the exact same time of the exact same days, and ultimately would get two completely different results. Are there any beginner courses, as I barely know stuff? I think before it comes to trading, there's a question that I would always ask, and that is, if you were to lose X amount of money, how much would it be before you go, damn, yeah, this is too much now. I can't do it. Like, how much money have you got to invest into this? Is the first question that I'd be asking yourself, because you can go learn all these concepts, but it doesn't mean anything unless you've got the money to invest into trading in the first place. You're in a game where you need money to make money. Gonna be honest with you, mate. I think demo accounts are a completely waste of time. They teach you absolutely nothing. They teach you nothing. Oh, I made 2% on a demo account. Yeah, but you wouldn't have taken that trade if there was actually real risk involved. I personally think you should completely stay away from demo accounts. Completely stay away from demo accounts. Mate, Atlas Funded did like a $1 account. That is a perfect starter entry. They do accounts all the time, and to be fair, the prices are really good. If you're looking for CFD firms, like I said, you can go onto Prop Firm Match is great, but obviously there's a reason why I'm here with Atlas. They've looked after me and many of my traders inside my community as well. So yeah, look at I don't know if they still do the $1 accounts, but they do these little accounts all the time that are perfect for just starting off small. I'd recommend like a small 25K account. Just keep the risk small, build that sort of risk tolerance. What I mean by risk tolerance is being okay with losing, because no one knows how to lose properly when they first start trading. You think you do, you definitely don't. But you could get the $1 access account, by the way. You could start just practicing on that. Again, with proper risk management, learning to be reactive, place trades fast, manage trades. Stay away from demo. Demo will not teach you anything. And I've got to a point now in my trading where people call me crazy, but I I full port every eval that I get. I'd never traded, well, now anyway, I don't trade evals properly. Because it's just fake money until it's funded, basically. So I'm at a point now where I just full port my trades when it's an eval, and then obviously use proper risk management when it's a funded account. Hopefully you'll get to that level too, bro, in due time. But that's how I scale up funding fast. Buy in bulk, full port every trade. Quite fascinated by how deep charts makes you a line of best fit. A line of best fit? I'm not too sure I know what you mean on that one, mate. I have one 400K with Atlas, great firm. Yeah, Yandri, I think it's you, Hendry. Who else uses Atlas? I think Ollie used Atlas for a little bit. Yeah. It's just easy to follow rules as well. It's just like the simplicity of it's good. Obviously, for me, I've taken a bit more of wait, let's have a look. You see that line? Isn't that the best fit line? Oh, no, you can ignore that line, mate. That's just an EMA. For some reason, right, on this, it's been tweaking out on me. So this line here, I want you to completely ignore. When I use this indicator, which is the value area high, and then you've got point of control, and then you've got the value area low, this blue line, pink line, and blue line. These are the value areas. And above these areas are standard deviations. So we have -1 standard deviation of this area, -2.5, I think, etc., etc. This is just an EMA, and I don't use EMAs. It's basically just like, oh, we broke the EMA, now we go bullish. We broke the EMA short, we go bearish. And to be fair, if you look at it, kind of works. Well, I'm not interested in using it personally because you see how it like doesn't really, it only looks good in hindsight. It doesn't look good in the moment. So I don't use EMAs. It's just part of this indicator, and I can't seem to remove it. But good question though. Yeah, it's just a moving average, but it's very tight. And then this line here is the VWAP. Now you can see how straight the VWAP is today. When the VWAP straight, it's usually bad day. Usually like a what you call like a consolidation day. It's not good. You can see here now, we've come up to the value area and there's a buyer trapped. If he's forced to hit his stop loss, because you got to think, right? This buyer right now, he got in here. Where's his stop loss going to be? Well, he's most likely going to be invalidated at the most recent low. So this is his position. And, if he's going to have to close his position here, what this is most likely going to cause is an aggressive reaction. Because if he's failing here, means buy-ins not getting rewarded. Buyers are failing at this area of the market. They're forced to close, gives sellers more opportunity to get in and push price lower. So we'll see here if we take this area. There you go. So you can see now the sort of momentum's kicking in. He's probably now been stopped out of his position. Sell efforts now coming in. So you can see how everything's starting to align now. Big sellers aren't getting rewarded. Sell efforts starting to come in here. We'll see if sellers manage to hold this area. It's because it's quite a choppy day. I'm not really expecting like massive delivery from these areas because you can just see it's just, it's NFP price action really. But yeah, this currently it's looking good for sellers. Big buyers aren't getting rewarded. We failed to get above the value area. It's a failed auction. My only concern is this little green box here. This does have quite a high probability of being hit. This is basically an inefficiency, or where the most inefficiency lies within this leg. There'll probably be a fair value gap up there. You'll probably see it. I can remove all these lines now. I'm quite I like to have clean charts. I'm a bit funny about it. There we go. So we'll see if this gets hit. Nice. So now we're trading back above the value area. Sellers tried to push it, but you can see here throughout this whole leg, buyers have been in control, which is good. Sort of sentiment's kind of changing now. We finally got out of this range. So I think two things are going to happen here. One, we're going to see a very sharp reversal back into this range because it could be a range day, or this is going to accelerate aggressively. Most likely back up to probably these highs up here. If we check trading view, we'll be able to find the sort of gamma level that aligns. Let's have a look. Yeah, so we're coming up to GEX4, which is 750s, which kind of aligns with my thesis. So 750s being there. So I think this area is going to be quite important for price. I think this is going to be the decisive area, whether we're going to come run back up to the highs or we're going to sell off again. We can take a look at ES as well, just to see the correlation. And you can see that it's slowly starting to, correlate. It's still not brilliant though. Just flicking between the two. Doesn't seem to be a divergence yet. NQ looks good for that squeeze higher though. Honestly, this does look like a pretty good long. You'd have probably missed your entry though. Trade back above the value area. Buyers getting rewarded after tagging into the inefficiency. You look to get long on the 1 minute candle closure or 30-second candle closure. Your stop would be below the effort zone. And you target here at your break-even point and then let the rest run. And I think this high does look good on the cards. We'll see here. How long have we got on the minute close? We got 5 seconds on that. It looks like it's going to close quite strong. So we might open here, create a bottom wick, tap back into this area, and then shoot higher. We'll see. See if we tag back to this line or not. Oh, Yandri's definitely in a long, aren't you, mate? You're definitely in a long. I know you are. So now we're trading above the value area. Is flow going to stop? You'd like to think so. I mean, on a day like this, probably not. The context of this market is it's a consolidating market based on what today's delivered. So I'm not really expecting crazy movements, but to answer your question, yes, usually when we get above these areas, depending on the context, if I'm bullish, if I'm bearish, I'll look for continuations or reversals off these areas. Again, it's a really a good model to trade. A couple of the people that I trade with, just some insiders, they all trade like volume profiles, low volume nodes, value areas, and it's kind of ridiculous what they do scalping because they just play ping pong with the market, and it's fun. It's almost too fun sometimes. All right, Yandri's not in a long yet. That's okay. That's okay. To be honest, Yandri, I swear you're up on the week, so I wouldn't be doing too much. So it's Friday NFP, brother. Usually Fridays are good for me though. Like I said, I'm currently waiting for the breakout of the initial balance. Just up here, it's quite a long way away. I'm just kind of expecting a choppy day. You can see it's just been got directional after news, and then as we just came straight back into the range and chopped again. So it's not very directional, this market at the moment. I thought the data wick sweep was nice, and then after that, like, look at this 15-minute. This 15-minute candle looks horrible. It looks like a cactus tree with it stick out, and then it's a couple sticks there. It looks horrible. We need more direction. Sellers rely to bring back the reversal. What right now? Do you think? I mean, I don't know. I think this is again. It's quite a choppy market, so there's a good chance that we could just have a pullback and then slowly sort of grind higher. I'm bullish on this asset overall. The only thing is the initial balance. The highs formed first, so statistically speaking, the low is more likely to get broken. Currently, there's like a 30% chance we're going to break this high based on the high forming first of the IB. So the IB statistics are kind of going off that, like, not, they're doing what they shouldn't be, essentially. The market's going sideways. We've obviously had an FP release. We've already taken my target, which the most high probability target based on where we are in price currently. I think most people, especially if you're looking to kind of catch the continue, I think you should be sat on your hands right now, because I think this looks good to go sideways for a little bit. Sellers really trying to bring back the reversal. We can actually take a look. Should we see? Not really. There's no heavy orders, but we've tagged back into that level I mentioned about. I thought there's a good chance that we could pull back to this area and then continue higher, just because it's the gamma level. And overall, I think we're in positive gamma, and also I think the sentiment with it being a Friday is quite bullish. And so everything's just kind of aligning for me right now. What are gamma levels? That's something I'm going to cover in a separate time, because that's in depth. That's going to take some time to kind of go through. It's not something that I could probably explain in a live stream. I'd need to do it more one-to-one. There are videos on YouTube you can watch, but I use a company called MentorQ. Again, it's a subscription based, just like Deep Charts. A bit cheaper than Deep Charts, but still expensive for what it is. You're paying like $50 a month for a few lines on a chart, but those lines are very good. You can see here we've managed to, again, it's so predictable once you've seen it over and over again. We got above the gamma level, we've revisited that. Above the value area, we've respected it, and now we're slowly getting that, gradual push higher. No aggressive selling. It's only aggressive buyers getting in at, 50 cons, 45 cons. Like I said, I think this looks good to ride all the way to the highs. My only concern is if we do take the IB high, if we put in a divergence, which by the looks of things, ES is about to do. So if ES takes this high, this will be interesting. Okay, so ES has taken the high now, so we've got a divergence. So I imagine we've probably got some aggressive selling going on deep charts right now. Let's have a look. Yep, so you can see trap buyers here. If people are long, we don't want to see these guys get cooked. But it's good because buyers are protecting this area. So again, we can probably expect a bit of resistance out of this to get back up to the highs. We want to see buyers get rewarded. But if he's going to get stopped, this could look nasty for buyers. This could look nasty. And then here, your buyers can flip, and then you can go bearish. Do you know what I'm saying? This is why I love trading these sorts of time frames. So like now we've revisited this area. Yep, there's the selling efficiency. Again, this area that I thought would react from now turns into resistance. We'll see if sellers manage to hold this. We've got a buyer here at 113 cons, not being rewarded. If this pushes down again, he's going to be forced to close, and this could be bad. So buyers need to kick in here. It makes those lines for you. Yeah, so they update every single day, mate. I don't have to plot them myself. They're really good, though. But again, these are primarily used for futures trading. Basically gives me the projected high of day, projected low of day, high volatility levels, your gamma levels from 1 to 10, core resistance where you can expect heavy selling. And it's basically, if you're curious to know what these levels are, they're institutional hedging levels. You'll notice most of them sit at kind of psychological levels. But the data pack that I get this from is from pre-institutional traders. So, or I should say post-institutional traders, Mentor Q. Brilliant educators, by the way. Fantastic. And a really, really valuable tool. So as I mentioned, if we kind of get below that level, it's going to look quite bad for buyers. And you can see there, we got below it. And now we're really starting to break down, followed by the heavy selling. And this is the beautiful thing about order flow, is these movements are so predictable once you see them time and time again. But I'm pretty much done for the week. Well, hopefully next week when the price action is a little bit better. Obviously, I'll be calling out my live executions, not for you guys to necessarily signal bot, but to give you guys context of how I manage trades, the reason why I get involved. I've been live streaming now for a good while, so I'm quite familiar on how to make it obvious. You can see here now we're going through that period of choppiness again. Again, revisited the value area pretty much to the tick. Because again, there's not really much value down here for sellers. They're really struggling to get below it. Kind of expecting price to go sideways a bit based on buyers protecting this area here. You can see it. If I draw out my box, buyers are really protecting this level. Sellers are really protecting this level right here. This could just get choppy. And this is, again, order flow gives you that context. You're looking at TradingView right now and you think, oh, we've just got to break a structure. That's lovely. I'm going to enter long. And then you've missed the context of, well, actually, if you look at the information provided to you, you don't really want to be in the market right now. And that's what TradingView traders don't get. They don't have this information. And this is what gives me an edge. My level of discretion plus a tool that literally gives me so much information that I don't need anything else. It's telling me everything that's going on. You can see we got a seller here right now, a seller here right now. None of them getting rewarded, but they're coming in stronger right now than the buyers. What concerns me is though we've got this amount of selling, it's not moving down. It's not moving down, and that's what makes me think we're just going to chop. I'm gonna whack some music on, I think. I won't put it on the stream because I'm not too sure about the copyright stuff. I'll have to ask about that one. Deep chat's really nice. The colors are a bit funky, aren't they? These are the preset colors, so you can change them about. My chart is particularly clean. I'm quite particular about how I have my charts. I don't like a lot of noise. Like I need clean. I need easy to read. And this for me is perfect. But yeah, just for context, so I've got on my big screen, I've got a big screen up here. I'm watching TradingView on that one. I'm watching the kind of lower time frames, so just like the 5 minute, the 1 minute. I'm also watching ES as well. And then on my smaller screen, which you guys are seeing, I'm looking at deep charts. Obviously, my execution platforms are on the other tab. But this is what my trading view is looking like. You can see there, breaker structure traders again, kind of getting caught out in the chop. So avoidable. So avoidable. You just read the context of this. You should expect it to chop really. We obviously have that divergence as well. So it's going to be interesting. What tool are you using for the gamma lines again? It's a paid indicator, mate. It's called Menthol Q gamma levels, end of day. You've got to have the pro version. It's a good tool though. But they're just very reactive. Well, depending on what levels they are, some of them are completely irrelevant. I've been using these now for 8 months, and it's pretty silly. Pretty silly. We'll jump back onto the order flow side of things. I feel like people are enjoying that more. It's quite fun commentating this actually, while it happens live, because it's so fast. It's quite engaging, I think. We were right about the chop though. Choppiness. Yandri, how are those longs getting on, mate? Oh, you're doing good. I don't think you'd have got in long at this high in the range, to be honest. I don't think you've done anything. I could be wrong. You might have gotten long off the value area. We'll see. For those that don't know Yandri, I've been working with him one-to-one for a little while, as well as some of his close friends. I've known them for quite a while. Hello, Mr. Team FGYT 2.0. That's a name and a half. Welcome, my friend. But I'll be active inside the Atlas Discord, and if any of you want to drop me DMs outside of stream in terms of, watching videos or directions, I can point you in the right places to kind of get this sort of information. I'm more than happy to do so. As I mentioned, obviously I do YouTube, but all of my education currently is free. And obviously I'm going to be streaming with Atlas. I do have my own kind of insider group of traders too, but as of right now, that's closed off to the public. You're still waiting for your longs, Yandri. It's all right, mate. We'll get there eventually, bro. give it. I don't know, over the weekend, maybe Monday. Maybe you'll get your longs then. Potential gap in the market. We'll see. We will see. I wish I didn't say it was going to chop now, because now it's really, really chopping. We can expect a breakout relatively soon. It won't obviously chop forever, but usually tight consolidation periods like this, it's usually loading for a move higher or lower, depending on which side of the range it's going to break out. You can kind of see that you've got a lot of buyers here kind of loaded. You see that? All of these buyers in this leg here. If we get above here, we're most likely going to do this. Why? Because all of these sellers at the bottom are currently not getting rewarded. And if they're forced to close their positions, then price is likely going to flush in the opposite direction. But it could also happen the complete other way. Sellers could take control of this, meaning that sellers are getting rewarded, meaning that all of these buyers in this leg here are most likely going to be forcing to close their positions, most likely causing price to do this. Now, if you look at TradingView, you tell me where you're going to find that information based on a 1 minute candle. Tell me where that information is. It's just candles on a screen. There's no information. And genuinely, I feel naked without trading with deep charts now. It doesn't feel right because this gives me nothing. It tells me nothing. So if you're not trading without deep charts, find a friend that has it or buy it. But I do warn you, it's not cheap. I thought traders usually go with the flow. Why they are trying to sell when the flow is mostly going higher and not getting rewarded? Well, that's the thing, right? Again, it depends on the context. So there'll be days where I'm more in a continuation based mindset. Like today, I'm more of in a continuation mindset. I'd rather look for, the trend and follow the trend rather than trying to catch a reversal. But there will be days where I think, actually, do you know what? Nah, the reversal looks better here than the continuation. And that's just being adaptive. That's what trading is. It's about being reactive and adaptive to what the market's telling you because, the market's forever changing. So your point there is you think traders usually go. My friend, you don't know. You don't. I don't know. It's only what happens in the moment. So to answer that question, um, would kind of be wrong, I think, because you don't know what's going to happen. So, like I said, I think if we can get above here with aggression and speed, this is just going to go pew, and just shoot off. We'll see. See, in times like this, I can look at this and go, well, why are we not pushing higher? Well, I can look at ES and go, well, what's ES doing? ES right now, currently, 1 minute candle's just opened. It's forming the bottom wick. If this flips, it's going to create the top wick and most likely push price higher. So this is most likely just a slight pullback to potentially go higher. And I'm hoping we're going to get that squeeze, that aggression higher based on us taking that level. There it is. Come on. They should buy it here. And they should buy it aggressively. It just depends if ES wants to push higher because the longer ES sells, it's gonna be tough. But it might just build. It might retrace to then build higher again. Push uploading. Yeah, I think so, Yandri. Usually the volume's been kicking in pre-market open, but I think after the news today, it's going to be a bit of a directional day, and I just feel like this is just going to go in one direction and not stop. It'll just be like a slow grind higher. We'll go through periods of chop, followed by an extension, followed by chop. Again, more buying coming in. They should just squeeze this higher. I'm surprised it's not gone already, to be honest. And I think based on this, the target higher for me, the reason I want to see price go higher is based on the equal highs on NQ. The equal highs look good. I don't think price will get up here today, but this is my reason for price for going higher. This is the higher time frame context. If I just remove the gamma levels, you can see here manipulation leg tapped into deviation 2 to 2.5. Really nice initial reaction. I ended up trying to catch a reversal here, back up long to the equal highs yesterday. I did take a loss on that one. Price ended up selling off, tapping into the order block, and then really clean reaction back higher. And I think that was just a correction because at the time the markets were really out of sync. This is a correction to then send price back up to all-time highs, and I feel like the equal highs look really good. Have you got that squeeze yet? Yeah, it's squeezing eventually. You can see now. We kind of anticipated this. We get above here, more buyers are going to step in. They're going to try protect this level. Does look good for longs. So like this for me, again, really nice continuation trade, break out of the range. Again, you'd probably be in prior to these big buyers anyway, so you're technically taking the gamble in terms of are these buyers going to step in. Usually, I'd want to see this at the value area, somewhat like this. This is great. Trap sellers not getting rewarded, trading down at the value area, but it was really choppy. There's no like instant reaction. I'm good at catching those instant reactions like this. I said as soon as we break this level, we're going to pop, we're going to squeeze higher. These are really predictable, really, really predictable. But these breaker structure traders who are trying to go short based on this level, getting cooked, or they get long based on this being the breaker structure, they get stopped out, and then they get the real move. And timing is essential. And order flow gives you really good information to basically get the timing bang on. Not every time, don't get me wrong, but it's definitely helped me. But it's just quick, and you have to be reactive. You can see here that NQ's pushing nicely. If we take a look at ES and what ES is doing, ES is also pushing nicely. So you can see they're quite correlated. Usually when one's going in one direction, it's kind of following in suit. So looks good. ES has broken the IB high, tagged the 0.1 level. Good. Yeah. We just need a NQ to actually break out of this area because they do be struggling. Oh, there we go. Nice. We got there. Brilliant. Nice little squeeze higher. So based on this here, honestly, based on how the IB's been performing recently, you could probably just long from here and target the previous high, and you'd probably make money, to be honest. This, every time it's broken this week, has just delivered higher or lower, depending on which side it broke. Break out of the IB low, continue distributing lower. Break out the IB high, just continue distributing higher, again with no retrace. Breaks out the IB high, just gets that continued distribution higher. So I'm kind of expecting the same today. Do you know what I mean? Break out the IB high, probably a continuation higher. My only concern is it's gone against the statistics of the high forming first. I've made a video on that. I won't go too much into detail, but yeah. Did anyone manage to catch the longs anywhere during this? I'm going to imagine not, because I didn't call anything out. But also it didn't really deliver anything too clean. The breakout was nice, but again, it followed by this sort of price action. The push-up's clean. The entry isn't. It's not really offered as much, especially for stop loss invalidation. In order to invalidate my stop, my stop's going to need to be down at these levels. And ultimately, the risk. Oh, that's a long position, but yeah, the risk reward didn't make sense for me. So it's no big deal. Even though, like I said, I do think this looks good for a squeeze. Push up loading. Hopefully, good day for buyers. A future's volatile also. Yeah. It depends on the geopolitical context, really. With Iran and the Trump stuff, a lot of that sort of political news has had major effects on my trading for sure. Like Biden, mate, just playing ping pong with the market, living life, having a great time. Donald Trump comes in, the market takes a bit of what I call like a panic shift, and it's very, especially on days where stuff's going on, you'll experience no volatility followed by crazy movements. 800-point sell-offs. I think it was a couple of days ago we had a 3% gain in the space of like 8 hours on the Nasdaq. It was insane. Like you can take a look at this. It was, what was it? Here. So on this day here, we expanded 3.8%, which, by the way, is an insane amount of price movement. In New York session alone, that's like 600 plus points. That's insane movement. And getting involved in these sorts of moves is pretty difficult because it offers no retrace for a continuation. And again, when it comes to stop loss invalidation, as a trader, that's something you need to think about. It's pretty difficult to kind of trade these days, but you'll get days like this followed by days where price action's a little bit cleaner. Followed by yesterday. I thought yesterday was actually really clean. in terms of, again, sweep of Asia low, target the Asia high, really clean. Today, I just think, we've taken majority of London's low. We took the data wick. We've rebalanced price action. We've come into 50% of the daily range. We've reacted out of that area. We've broke the IB. We're getting the expansion above IB. We've got equal highs above. We have the pre-market high above. There's so much reason for price to go higher. It's like, it's super easy to read, but today's been really hard to kind of get involved, just based on, again, what price is kind of given to us in the moment. But a clean day in terms of the longs for sure. Predictable, hard to get on side with. I think down here was good, but again, it's choppy nonsense, and I'm not gonna I'm not gonna trade choppy price action, and it's not what I'm in the market to do. Yandri, no clear entries for me either based on risk to reward. Yeah, valid. I'm in the same boat as you, mate. That's the thing. So many people kind of forget about the purpose of like stop invalidations and things like that, and they'll try go long here with a scuffed risk to reward, scuffed risk on the trade. Just makes no sense. It's like, learn to be patient in these times, because I can call all these moves. I don't have to catch them all. It's not my job. Yeah, I hope you guys have found this insightful so far. Anyone has any questions, you're more than welcome to ask away. I live and breathe this. Absolutely love it. Anko, welcome. Good to have you here, man. Like I said, for the guys that are on YouTube, if you fancy jumping into the Discord, you're more than welcome to. So you can see here now, again, this is just buying. Sellers trying to get involved, not getting rewarded. So again, just kind of expecting this to grind higher, really. Not much else to say right now. Because like you got to think about it. Even if we do have a retrace, buyers have protected this area here. They've protected all of this area here. It's just stacked buying, and this indicator here has said this is where the most buying is taking place, right here within this green box. So I wouldn't expect a retrace down to there, though, to be honest. I'd just expect this to go higher, but we'll see. If we check on where we're at in terms of do on the chart here for you guys. So this 0.1 extension level is 0.1 deviation of the initial balance. This gets hit 90% of the time on single break days. That's why I called the long. Long up to this high up here is pretty high probability. Single break day currently, this gets hit 90% of the time. This gets hit 50% of the time. So you can imagine the statistics for this will be like the 0.2 extension level maybe. This gets hit, I think it's 80% of the time. We can actually check this. It'll be a breakout day. So yeah, that'll get hit 82% of the time. So currently there's an 82% chance that price is likely to hit this level based on this being a single break day. Hence why I said the longs off the first break would look pretty good. But for me, it just doesn't align with the context of the market. I'm not I have no risk tolerance in choppy conditions. It's just how I lose money, is trading this sort of stuff. Is the market going down after the high sweep, Leo, sir? Currently, I think the price is going higher, actually. I don't think we're really in reversal territory. We're in positive gamma. Order flow wise, we're looking very bullish on the day. We're coming to the end of the week. I'm expecting the daily print to, well, essentially print higher. Same with the weekly. I expect this to potentially make a new high. In terms of the target for me, I mean, price is only 200 points away from it, but it's not really been delivering with speed. So I think it's going to be one of those days where it's a really slow grind higher. And yeah, as you can see, it's sort of doing that. If we retest the initial balance, then we could see a bit of a bounce here. There's the bounce. Let's see if it holds. Again, this is coming into the area where we can expect sort of buyers to protect. In terms of gamma levels, we can have a little look. I don't know if there's much up here for us. No, we're kind of bouncing between Gex. With the fact we're above Gex 1, we have the projected high of day above. Yeah, I still think this runs higher, to be honest. We might have a slight retrace based off the sweep. I think overall this goes higher. Are you going to go in? No, definitely not, mate. So the way that I've been rewarded and I've got consistent success as a trader is by being selective with my trades and being selective with conditions that I trade. And yeah, currently this doesn't meet my market criteria at all. This is, in my opinion, pretty dog poo pre-PA, not gonna lie. Far from a good high probability day. The moves kind of already happened for me. I wanted longs after the sweep of the data wick. Didn't really offer me anything within this. And then ended up gooning higher up to initial balance high, which statistically, this was quite low probability. It was actually higher probability for us to go for the low today based on the high forming first. So the fact we've inversed these statistics says to me that it's probably not going to be a high probability day. I'd be entering way too high up in premium to get on a trade. You know, if I'm gonna try go for long, I want to be looking for discount, not the other way around. But yeah, any other day, I mean, this doesn't look too bad in terms of how it's aligned. But yeah, I've been trading IB for about a year and a half, and this is not good conditions for IB. So I just think it'll break above this high and it'll just go. I said we're about a bounce here, and you can see that buyers are really protecting the initial balance. They're trying to hold it for sure. And it's like every time sellers have got involved, they've just got cooked. Sellers get involved, they get cooked. Sellers get involved, they get cooked. Like then selling is not being delivered aggressively. It's like a bit of a move, then it's a retrace that'll stop most sellers out, followed by a really choppy continuation, followed by another sell off, followed by a break even, followed by another sell, followed by break even. So you can see there's just no point in being on the short side of the market right now because the only big moves that are being delivered is from the long side. Like big moves long, big moves long, big moves long. There's no point in being on the short side. One of the best trading educators in the space right now. Everyone take notes. Yeah, Andrew, you don't have to say that, brother, but I appreciate that, man. I do try. It's my bread and butter. I love this stuff. I think as well it helped because I have a coaching background. I used to be a football coach actually before I was a trader. I used to be an academy coach before a team that just got relegated actually from League Two, so they're no longer a professional football team. So when it comes to coaching, I like, especially the trading side of things. I like to think I've got a way of explaining that's quite easy to understand. So I think if you guys definitely make a habit of turning up here every day, every Friday, and potentially more days if we decide to expand on that, then yeah, I think there's a lot for you guys to learn come Q4 this year. It's going to be good. If you come into this with an open mind, mate, you will learn. It's pretty difficult not to learn something. You know, if you're surrounded by people who are consistently doing it. You know, like I live stream every single day, Monday to Friday. Not with Atlas, obviously. Like I said, I trade with some insiders. Some of them stream as well. But yeah, I'm kind of used to it. And what I've noticed is people who just watch other people trade eventually in X amount of time, give it a couple months, you'll slowly start to think like these people, you know, kind of goes back to that old phrase or saying of you are the sum of the five people you spend the most time with. And if you surround yourself with traders who are consistently looking to improve, who are open-minded, who have had good experience through very good traders as well, then you will definitely learn something for sure. I see you sent me a friend request as well, Pranav. I'll get back to that shortly. And again, we're going through that sort of period now where the sort of volume's dying off a little bit. Interesting things. Is your clarity of chart trading? I like it. I learned today new things from you. Oh, I really appreciate that, Anchor. Thank you. Um, like I said, I mean, this has just been a very basic overview of kind of how I trade. There's been in-depth parts as well, and I understand that a lot of probably what I've said today has gone through one ear and out the other. But like I said, it's repetition. It's turning up every day. If you consistently expose yourself to this sort of trading and looking at order flow charts, I can use Yandri as an example, or Hendry, even Ollie, right? Someone I worked with called Ollie. He first looked at deep charts, I think about a month ago, and was really overwhelmed. He was like, "Whoa, I don't know what I'm looking at. I don't know what I'm doing." Fast forward to now, broken read order flow and to a good standard as well. Like the way he approaches it using volume profiles and things like that is insane. And yeah, all he's done is he's just exposed himself to it. Spot on read on the market as always. Yeah, the read on the market's been really good this week. Happy with it. Just not been the best in terms of delivery. So it's been a bit of a boring week. But yeah, this is what we do. This is part of trading. It's not going to be exciting always. I've enjoyed today though. Meeting some new faces as well. And again, for the guys that are still here, appreciate you guys jumping on today. Appreciate having you on. Do. What's everyone's plans for the weekend? We got much going on? I don't think I'm doing much actually. I'm booking a flight. I'm going to Paris, so I need to book flight and accommodation. I'm going for 3 days, and then tomorrow I'm off to the cinema, I think. And then Sunday, I'm rebuilding my studio, like my workspace. So hopefully next stream, maybe not next stream, it might be the week after. I'll have a face cam so you guys can actually put a face to the voice. Work. Standard for McDaniels. All that guy does is hustle. We love it. Although I hope you don't do pole dancing in your spare time, because that gives questionable, my friend. What do you mainly do for forex? I don't even look at forex, bro. Don't even look at it. Again, it's not an asset that I'm interested in trading. I've made a video on my YouTube actually. It did really well, and there was quite a lot of controversy, and I think that was kind of settled after that video. But all you need to understand is futures markets are designed to do this. Forex markets are designed to do this. You have to ask yourself what sort of model you want to build. Do you want to build a model that is suited for, markets that are designed to go sideways? Or are you going to build a model for assets that are designed to go up in the long run, such as index funds, right? So you got you got forex and you got futures. Now, for me personally, from my emotional perspective and my understanding as me as a trader, is these sorts of conditions I cannot trade. I can, and I can read it, but usually I'm losing more than I'm winning. And even though I'm still profitable, emotionally, it's so demanding because I'll lose more than I win with this sort of price action. And emotionally, it takes it out of me. But with this, I'm a lot more selective and I'll go through a period of, a week of no trades, followed by a 4-win streak, followed by 1 loser, followed by 3-win streak, followed by 1 loser, followed by another loser, followed by a 4-win streak. Emotionally, trading these sorts of markets, it's so much less demanding, I find. Because usually when opportunity is clear, it's clear. Opportunity in this is it feels like it's everywhere. And that's what I don't like about it. So when it comes to forex, I can obviously do market reads and stuff. My sort of standard deviation Asia sweep model was first tested on Euro USD, but had better results on the Nasdaq. So yeah, when it comes to forex, I don't I don't even remember the last time I analyzed a forex pair, to be honest. there's probably, if I go to AUD USD, there's probably analysis on here from like years ago. I really wouldn't be surprised. Let's have a look. Yeah, deviation tools drawn out in like November 2024. You kind of get the gist. Beautiful reaction off -4 though. I love standard deviation. Such a good tool. Such a good tool. Yeah, we're sort of going through that choppy phase again. Ooh, it doesn't look good. Sellers coming in strong, followed by aggressive buyback. Screams to me we're going to go sideways again. I mean, don't get me wrong, Pranav. My opinion is always going to be biased against the Forex market because I've never seen success from trading Forex. Most people that I've traded with have never experienced long-term success in Forex. You've got ultimately so many different markets to choose from, so many different approaches. For me, it's too overwhelming. And I feel like the volatility aspect isn't necessarily a bad thing. I want to trade markets with volatility. But the issue is I feel like Forex it's almost made to be against you. You've got spreads. Spreads is one thing. You don't get spreads with futures. You enter, you get filled exactly where you enter. Is scalping very effective with futures? As I thought, it's mostly long term. So scalping for me, the futures, 100%. It's my bread and butter. It's what I do. I spend a lot of time in the lower time frames. Usually, my job is to predict the next print of the next 1 minute candle or the next 2 minute candle, whatever. And I've been doing that long term. I've been doing that now for about a year and a half. Prior, I was trading more kind of ICT side of things. Order flow, I picked up about 6 to 8 months ago. And I take about, well, you can kind of see from my calendar. So last month, I actually lost more than I won. Obviously, I was still profitable based on my risk management. The month prior, you can see, again, pretty slow start to the month, followed by a really nice win streak. My training sort of goes through periods like this where it'll be really slow and then it'll go through, really good periods. And that's just, again, it's trading in a nutshell. I was trading a bit of gold and I can't stand trading gold. Is when NQ was doing absolutely nothing, just going sideways. Yeah, these are my results. To be completely transparent, they're 2025s, they're 2026s. Yeah, it's been a decent year. No negative months. This month there, February and January though, horrible. Like coming off the back end, like I went through, I think it was in 2024. So I got really arrogant here, and this is a good lesson for everyone, right? So November, I went on a really nice win streak, followed by December, where I continued that win streak. Took a loss. I think it was like a 9 win streak. Took a loss, and then obviously it was like Christmas period. And I came back and holy moly, didn't take a trade for like 2 weeks, took a loss, bounced back with a nice little W, and then followed by this that was just so emotionally demanding. No trades, followed by me trading gold because NQ was like untradeable. Tried going back to NQ, got cooked, and it was just a bit of a ropey time. And eventually the price action got better. And I just became a bit more kind of focused in terms of my process. Oh, hello. That was well, nothing too much in terms of reaction wise, but we're starting to get a bit of momentum up to the upside. See if we break out this range and stop consolidating. So NQ has bad times also. Every market, it depends what you mean by bad times. I mean, for me, it's bad because it doesn't suit the way I trade. For other people, it can be great. It's context dependent. It's not the same for everybody. For me, I don't suit trading choppy conditions. I suit trading more. Yeah, it's fine. Don't worry about it. But for me, it's more about being selective with days because I know when a day is low probability and I know when a day is high probability. And I will only trade high probability days. And I came to the market today after NFP release, and I said I want to see shorts down to the data wick. We got the shorts to the data wick, and then I said, don't know what we're going to do now. It's kind of low probability. And then we just grinded higher. And when we got to about this point here, I thought, yeah, we're just going to continue going, and it would just be a slow grind higher. We got a couple messages in the YouTube chat. Watching some rugby this weekend. Yeah, nice. Didn't know you were into rugby, to be fair, mate. Anchor, in options and gold, mostly people like to trade in gold. What is the best thing? Let me read this again. In options and gold, mostly people like to trade in gold. What is the best things is in options trading according to you? Okay, so I think I understand your question. So you're basically saying, you know, you've got like commodity traders, right? People who trade commodities, most people trade gold. People who trade Forex, people trade Euro USD. The most traded asset in the world is the NASDAQ. It is the NASDAQ. That's not why I trade it. But again, I'm going to be biased here and say the best thing in terms of, futures trading or options would be the NASDAQ, because again, it's the one that I have the most data on. It's the model that's given me the success I have. There's no need for me to switch. When it comes to, you're looking at things like gold, for me, I'm a scalper. I don't suit scalping gold because it's a little bit, too volatile. And when you've got things such as spreads, scalping isn't great. On futures, though, the spreads are they're basically non-existent. So if you're trading on a CFD firm, you're trading on a futures platform, it's basically the same thing. That's why I love the NASDAQ. It's just, she's good. She's good. But you'll have very little spreads on any CFD kind of execution platform that you use when trading futures. Be very small. But then you go to Forex and it'll be massive. What happened here? That was NFP release, my friend. So every Friday, the first Friday of every month, there's a news event called non-farm payroll. And it's very volatile. And that's why I use data wicks. Data wicks are very good. Should we take a look at the order flow stuff? See what's going on. You see, we're starting to get some aggressive selling now. Again, I still personally think this is just going to be very choppy. So I'm not really expecting too much. But sellers look like they're sort of in control right now. Usually when we're doing this, we're usually in a balanced price range, so there's no reason for price to push lower. We'll just go sideways. But my sort of question based on this is, if we break out the low, where's price likely to seek? And I personally think it would be the value area, based on this was where the previous area was auctioned efficiently. So can you see here, when we broke out this range, it was only buyers. Only buyers. If we come back into this area, previously it was a balanced price range. Buyers and sellers could auction efficiently. So if we come out of this area, we're no longer ranging. It's going to seek some form of balance, and the balance currently rests down here. So yeah, I think if we can get below this buy effort zone, a little push down to the value area and into this balance range would look pretty good. And then we'll probably go sideways again. Does it usually go higher? I can't actually answer that. I don't know the exact probabilities. You can probably Google it, to be honest. Again, there's a website called Edgeful that you can access a lot of this data from. I'm not affiliated, but they're really good to kind of get that information from. Again, I don't trade news, and I'm never in a trade when news is occurring, so it doesn't really affect me. I do follow the geopolitical context of the world, though, and try track what's going on, unemployment rates, Fed meetings. I don't track it too in depth, though. I just use AI. I'm new to this world, trying to learn and understand what these things are and how to use and all these things work. So you're pretty much a beginner to trading them, my friend. What I would say is, don't be overwhelmed. Everyone has been in your shoes before. They're looking at the chart thinking, I don't know what the hell is going on. And that's completely normal. There's a couple of things that you need to know coming into this space is, once you leave the path, there is no or once you enter the path, there is no leaving. It's a very demanding thing, and it's quite addictive at the start. Second thing is this is going to take time. Come into this with an open mind, expect to fail and make a lot of mistakes and lose at first, and not to understand anything. Just like everything, you start a new job, you're not going to understand anything, but you do it for, 2 weeks, 3 weeks, 4 weeks. All of a sudden, on the fifth week, you turn up and you don't need to ask what you're doing anymore. You just know what you're doing. It's the same thing with trading. The way that I see it is anyone, even a 5-year-old, can draw lines and boxes on a chart. Understanding all of this is a completely different story. And the way to understand it is exposure and time in front of the market. And I'm not talking about back testing. I'm talking about turning up for 2 hours every market open for 2, 3 years, 4 years, 5 years consistently to build a strong level of discretion. Discretion being that ability, that instinct to almost know what price is likely to do based on your understanding and discretion. So you're in for a long road, my friend, but it's an exciting one. There's a big opportunity here to find out a lot about yourself. Training is a massive journey of self discovery, by the way, massive. And ultimately, if you're someone who's looking to improve themselves as a person, build a financial income through a high income skill, and improve themselves on a daily basis, then trading will do that. Because if you're not a disciplined person, you will not be a good trader. If you're not someone who can handle emotions, you're not going to be a good trader. If you're a lazy person, you're not going to be a good trader. In order to be a good trader, you have to be a disciplined, focused person because your life is a reflection of your trading. And that is a quote from Anton Krill, who was, funnily enough, my mentor's mentor. Anton Krill, I'm sure McDaniels will be familiar, being a gold trader himself, was an institutional trader, and he always spoke about, your life is a reflection of your trading. If your life is chaotic, you've got bills to pay, you're consistently stressed about money, you're going to come to the market thinking, I need to make money for my bills. I need to, I need to put food on the table. Ultimately, you're probably not going to be a good trader because you're then trading out of emotion and all of these things kind of pile on top of you. Psychologically, it's going to beat you up, but at the same time, you're going to learn so much about yourself. And if you're an open-minded person and you're someone who has no ego and you can break down walls and accept defeat and learn, you'll do all right in this space over time. I thought I heard your wife. Are you calling Anton Krill your wife? Is that what you're saying? I don't know what he'd say about that. To be fair, he probably don't care. He's probably in Italy right now on a yacht, sipping champagne, having a good time. Yeah, I thought like that. That's a good way to think, though. I think, and like I said, I mean, not to self promo, but I've got some pretty good beginner friendly strategies on my YouTube that are quite easy to understand. Um, and yeah, obviously, if you ever need a hand anything, I'm going to be live streaming every Friday, so you're more than welcome to get involved. You said your life is a reflection of your trading or something like that. Ah, your wife is a reflection of your trading. Yeah, not quite, mate. Not quite. I don't know if there's a subtle call for help in there, mate. Is everything all right at home? Hopefully, she don't tune into the stream. Funny guy. So you can see we're going through that period of chop again. Not a lot going on. What time? We're on 5 o'clock. We'll probably call the stream in about 30 minutes. I think that's 2.5 hours, I think. Yeah, 30 minutes. So in this time, you can ask any questions you like, or we can just continue watching price and see if we can call anything. Will you be doing this every Friday? That's the plan, my friend. Yeah, that's the plan. I live stream every day, but for Atlas, I'm going to be streaming on a Friday. And as time goes on, this may be 2 times a week. I'm not too sure. But as of now, it's just Fridays, my friend. Every Friday, and yeah, it's gonna be good. I'm gonna be holding you accountable, Panvar. If you're not here, or Panav, if you're not here next Friday, And I know you're not serious. That's going to be my accountability now. You got to be here. As a beginner trader, is a few. Hang on a second. As a beginner trader, is a few trades are good in swing trading or more trades with scalping? I'm not too sure if I fully understand the depth of your question. Being honest, it's fine. But what I will say is, in trading, less is more. So, as a swing trader, you're probably not going to be taking a lot of trades. As a scalper, you'll probably see more opportunity, but it doesn't mean you need to trade more. You need to be selective with your shots because you can scalp and I can swing trade. We could get two very different results, but both make money. As a trader, you have to understand yourself from a psychological perspective, and you have to say, right, okay, is my lifestyle, am I, let's say, for example, I work a 9 to 5 job. Am I going to be able to scalp at a 9 to 5 job? Probably not. So I should probably take a bit more of a swing based approach. Just keep in mind, if you were then to leave that job, you still only have the swing trading scalp ability unlocked. If you're looking to kind of take more of an in-depth market view, you're looking to kind of get involved in shorter movements, that's going to require a lot of discipline and a lot of time in front of the charts. I can share a bit of a personal backstory. I also shared this on my second YouTube video. I was working a 9 to 5 job. This was about 4 years ago now. And in that time, I was learning Forex. And I was learning off a guy called MentFX. And don't get me wrong, I made no money. But what I did was, from the hours of 9 to 5, I'd work a job. And from the hours of 5 to 9, I would work on trading. After 9, I'd go gym, go bed, do it all again. You have to make sacrifice if you want to see long-term success in this game, because with trading, you have to imagine it as a bit like a hill. If you're going to run up a hill, you're not going to start right where the hill begins and sprint. You're going to get a run up first, right? And that's what trading requires. It requires that run up. It requires that prior knowledge before things can really escalate. And to get that prior knowledge, your best asset is time. And that time needs to be invested wisely. So for you, Anchor, what I would do is I'd look at your life situation now, work out what hours you're going to be able to dedicate to trading, i.e., an hour to trade live and an hour or two to collect data, expand your knowledge in, price action, market mechanics, etc. Once you've got that experience and that knowledge, that's where things will really take off. But you need that structure first. You need that structure. So get that structure first and everything else will fall into place. I don't think my risk management is good. You'd be surprised. Most people's aren't, to be honest. I know people that'll finish up, 2 hour on the day and be down because their risk management is terrible. They risk small on winners and they risk massive on losers, and they just have inconsistent risk. Your job as a trader, if you want me to put it bluntly, is to be consistent in all aspects. Your approach, your entries, your rules, your risk, because consistency is what gets you paid in this game. And if we're chopping and changing every 2 minutes, then ultimately, we're not going to be making money. So what you have to decide is, what is your risk tolerance? What amount of money am I okay with losing on a trade? Work that out and stick to it. Don't change it. Don't change it because you're in drawdown. Don't change it because you're in profit. Keep it the same. And the reason I say this, and I hate people that say, you're in 5% drawdown, lower your risk. Don't. You're trading fake money. You're trading demo money. Just because it's an eval doesn't mean it's real. Just because you lost $4,000 doesn't mean you lost $4,000. You paid $500 for the account. You ain't going to lose anything but $500. Your risk management, from the way that I see prop firms and the way that I see the kind of space as a whole, is your job as a trader is to use these accounts as a return of investment. Like, for example, I can draw this out because I think this is an important note while the market does nothing. So, for example, let me increase the size of this text quickly. So you buy, so 50K equals, let's call it $100. Okay, times 5 would equal $500. Oops. Okay, that makes sense so far, right? So let's say, for example, you have account 1, account 2, account 3, account 4, and account 5. Okay. Now each of these accounts cost you $100. Okay. So ultimately, in total, you have invested £500 into evaluation accounts. Now, follow me here. My win rate is 60%, for example. On average, I win 7 out of 10. We'll call it 7 out of 10 trades, right? So I win 7 out of 10 trades, and I'll lose, on average, 3 out of 10, making my win rate 70%. Now, follow me here. If my win rate is 70%, on average, every 3 winning trades, the next one will be a loser. Now, imagine this. If I lost my first trade, because I full pot this account, I've now lost $100. I full pot this trade, I've lost another account. I've lost $200. I'm on a 2 losing streak right now. Damn. My third account, I've blown it. I'm on a 3 losing streak right now. I've blown 3 accounts. Now, what's crazy is there's some guy out there who is currently minus 3% down on his 100K eval because he's using proper risk management. You may be thinking, well, he's in a better spot than you. You've wasted $300. My next trade, it wins. My next 2 trades, they win. Oh, actually, what we'll do is we'll call this 4th trade lost. I'm on a 4 losing streak, and then eventually I passed 1 account. So great, I passed an account. I'm now 50K funded, right? Well, this guy's won another trade. Let's go. So now he's up. Well, he's minus 2%, but I'm now funded 50K. So this should be 2% of 50K actually. So while this guy's using proper risk management on his evaluation, he's negative 2% down on his 50K, but now I'm funded 50K. Now, can you instantly see how full porting accounts per trade, so one account, 1 trade, loses, next account, loses, next account, loses, next account, wins, great, you're funded. Because you're either going to win and you're funded or you lose, you blow the account. Okay. You're now 50K funded, while the other guy is minus 2% in drawdown. If you get a 1% payout of this, that's $500. You get a 2%, that's $1,000. You get a 2% payout. Maybe by the time you've got the payout, maybe this guy's up 4% now. So he's actually up 4%, which is great. Brilliant. But what's he actually done? Nothing. Nothing's changed. He's just made 4% on a demo account that made no money. But the guy who full ported the account, who actually has data, this guy has data too. This guy is trading at the same rate. This guy wins 7 out of 10 trades. Because he went on a losing streak, he started with a bit of drawdown, and because he's using regular risk management, he's not even past phase 1 yet. But this guy who full potted the account, he's now got a $500 payout or an $1,000 payout based on the percentage. And now, based on all of these accounts costing $100, this trader is going to reinvest this $1,000 into 10 accounts because they equal $100. So if this guy now has 10 accounts at 50K, maybe he, if we would go off the 70-10 win rate, maybe he passes 7, loses 3. He's now funded 350K. He gets a 1% payout of that 350K. That's $3,500. Now, in this period, you've taken 10 trades. Maybe this guy's only just passed his first funded account. And now he's loving life. He's like, yes, I'm funded 50K. Let's go. I finally got the 10% mark. I'm 50K funded, but it's all right. Because the guy that were full potting accounts has just passed another 7 while this guy's been trading 1% on his eval. Do you see how important it is to use these accounts as leverage? As a trader, this isn't spoken about enough. And to be honest, Atlas probably don't want me to expose this because it's kind of the game of the prop firms. If you can use this approach and you have the confidence to do so and you have the data to back it up, getting funded should no longer be an achievement. It shouldn't be. because it's just like, well, all I did was win a trade. Getting funded doesn't mean anything. Changes nothing. So this is my approach to evaluations, and you have to have capital to do this. Don't get me wrong, it's not cheap. And don't get me wrong, it doesn't always go to plan. But long term, if I keep everything consistent, I'm going to get paid so much more by doing this than by doing this. Because I could do everything the exact same, except just risk more on trades in terms of full porting evaluations. And by the time I'd have made 10% on a 50K, well, I've already made 300K worth of funding plus a payout. Do you know what I mean? And imagine if this was, you got 3.5K now. Guess what? You buy 35 accounts and you do the same process again. And if you've got a positive win rate, it should be achievable. I hope that makes sense. If anyone's got any questions about this, let me know. I know that was quite in depth and direct, but honestly, it's the way that I'd advise. Sorry guys, I don't know what happened to the stream. There we go. Wipe the screen out. Sorry, someone came in my room, disrupted me. We got questions. Let's have a look. Did you also start with prop firms? And for it, wait, hang on a sec. Is it the same basis points in Forex if you're going for 100K divided by 10, it makes some base point? Again, I wouldn't know about basis points in Forex, mate. I'm not too sure what you mean there, brother. Did I also start with prop firms? Yes, I did. Started out with CFD prop firms, just like Atlas. And then as time went on, I started a personal account, got into the futures space. So I'm primarily a futures trader. I don't really trade CFDs that often. But when I do, it usually depends on the price action and the kind of context. Towards Q4, I think is a good time to kind of load up on CFD accounts. One, a lot of holidays, a lot of discount. But we're also getting to a period of time where I think the market's going to get very directional. And yeah, I think on CFD accounts, I'd take more of a kind of a swing intraday sort of approach with the trades. I wouldn't scalp, just because obviously it's a CFD platform. But I'd take the same sort of trades just on a higher time frame perspective, basically. I did start on prop firms. As most people, I didn't blow a lot of evals actually. I think I blew 3 before I got my first funded account. And then I got my first payout on my first ever funded account. And then I blew it. But I wasn't silly. At first I took things slow. But it got me nowhere. The thing that got me success was starting to increase the leverage on evals and actually rushing them to get passed, because there's no point in turning up for a month just to trade to get an evaluation passed, because it's like after that whole month nothing's changed except the fact you've got a certificate for doing half the work that's required for you to actually get paid out. Time is your biggest asset in trading, and the way to protect that is to, if you're going to trade an eval, in my opinion, you should not be taking more than 2 to 4 weeks to pass an evaluation. It should be passed quick. I'm failed quick. I can't remember what I said. It's quite a controversial opinion, but I love discussing it because it's like usually when you lay it out in front of people, it just makes more sense. Like I don't know a single prop firm trader who has been successful by risking 1% on evals, because half of them are still struggling to get consistency. It's like if you can't get consistency passing a 10% eval, you need to go back to the drawing board. Because like a lot of these people will go on like a 4-win streak. And it's like, well, If you had a 4 win streak and you were to risk, I don't know, 2.5% per trade at a 1 to 2 risk to reward, you'd have been funded. But people don't risk enough. They're too scared. I get it. It takes a lot of confidence to risk. But the more kind of exposure you get, the more kind of confidence you build. But again, if you guys turn up here, you'll watch me full port evaluations. You will. And you'll be sat there kicking yourself when you take the same trade and you go, "Oh, I should have risked more on it." I'll be like, well, you learn yourself, you learn for next time. But when I trade my fundeds, obviously it's proper risk management. I risk 0.5% per trade, secure my 5 winning days. If it's a CFD firm, I'll usually try build a buffer, cut the risk. It's yeah, it's a good way to approach them. Yeah, I agree with the statistics and data example. It's quite relatable for you. Yeah, like I said, I mean, I've spoken to countless people. There's a period of time where I did really well on social media, and everyone used to go, Why would you say full port evaluations?" And then I made a video on it on how to I can't remember. It's like how I secured 400k funding fast, and then everyone was like, "Damn, you're actually right. Like it actually makes sense." It's like when you really strip it back and you look at the statistics of the people who actually trade prop firms, the people who get paid are the people who full port evaluations. Would you recommend futures for newbies, or crypto, forex, or commodities? I'm going to be honest. Again, my opinion is going to be biased because I am a futures trader. Um, Most traders now are converting over to futures. Why? Because the entry barrier is much lower. Again, the prop firm pricing is slightly different to CFDs. There's also tax benefits for trading futures. Again, not going to go into that because it's not financial advice. But there's a lot of benefits to trading futures. And for me personally, the people that I've worked with one to one, and also previously with my mentor, is futures is so much more cleaner compared to assets like forex. Now, there'll be some people out there who can't trade NQ but can trade gold. There'll be some people out there who can't trade gold and can trade NQ. Like for me, I probably could trade gold. Have a model for gold, but it doesn't make sense for me to trade it because my results are already really good with futures. Your job as a trader is to kind of figure out what kind of trader you want to be. Um, if anyone ever asked me, I'd always say just get into futures because it's a low barrier to entry. The concepts used in the future space are relatively simple, and ultimately, you're trading assets that are very, very well. First off, the most traded in the world, index funds. Top 500 businesses being the ES or S&P 500. You got the US tech companies, part of the Nasdaq. All of these assets are going to be heavily traded, and you want to be in an asset that's got volume, direction, but most importantly, price action that's tradable. Like your job as a trader is to pick a window and stick with it. I have a specific trading window that I trade, and after that, I am done. So 5 o'clock is my cutoff point. Obviously, because we're doing a live stream today, obviously a little Q&A and things. It's fine, but this is why I have a cutoff point, because past a certain point in time, price will change, the volume will die, the direction will be less clear, and it won't deliver high probability moves. So that's why I have specific trading windows. And if I trade in that time, great. If I don't, it's no problem. It's not a problem at all. We just walk away and we come back the next day. Wait, do you recommend me to have a deep chart account for the price and buy and trading view for prop firms? Depends how much you got to invest, mate. Deep charts isn't a cheap thing. It's an investment. And people look at the price and they think, damn, I don't know if I trust myself that much to get the most out of it. You're looking at about, well, it depends on, I've got a deal, so I get it slightly cheaper per month. But I think it's like $300 for 2 months, or you can pay yearly for 1,200. I think. I can't remember the exact prices, but it might have gone up since I got it. I don't know because it's quite high demand. Mm, mate, it's a great tool. I couldn't trade without this now, but your won't it won't look like mine. I've got custom settings on mine, so it looks yours will look slightly different. The chart colors will be the same, but um, yeah, it's really good. So you can see now that we're going through a period. You see how we're going sideways, but the market is auctioning efficiently. I think I mentioned this previously, where I said if we tap back into said area where the market was, auctioning efficiently, most likely we'll do it again. And we're starting to do it now, where there's so many big orders coming through, but no side's getting rewarded, and it just shows that we're in balance. And until we're out of balance, you don't really want to be in a trade. Currently looks like sellers are getting rewarded. I think they're going to be seeking this area down here, and this is where it'll get really choppy. I think because again we've come out of balance now. We're probably seeking balance, which will be the value area plus this area where previously participants were auctioning efficiently. I got all of that information from Fabio, by the way. He's the best scalper in the world. Again, this is his platform for anyone who's curious. Fabio Valentini. I go high and bam. You take profit. My guy's just satisfying to watch trade. Yeah, there's a Words of Wisdom podcast. He did like a 3-hour live trading session. So much value there. And he uses similar concepts to this, like the absorption, but he uses volume profiles, low volume nodes, things like that, which I'm slowly adapting into, but I'm not changing anything because what I currently do works. Order flow and price action, which one you pick? Order flow. Like if you look at this from a trading view perspective, I love doing this with people. What does this tell you? Can you tell me what's going on in this wick? Can you tell me what went on at the top of this wick? Can you give me the information, what actually happened? People sit there and they go, well, price pushed up a bit and then it went lower, so it created a wick. All right, well, what does that tell you? Well, there's a wick and it's a rejection. Cool. What lies in this wick? I know, buyers and sellers. You see how you don't really know what's going on, but it's giving you a little bit of information to tell you that price has gone up and then it's rejected. It's not a lot for me there, but I can then come into deep charts and I can go, well, let's have a look. So what ended up happening was we had aggressive selling followed by trap buyers who were trying to buy really high up in the move, failed to get rewarded. Sell effort then came in. As soon as this sell effort comes in, based on this trap buyer, you can expect this area to hold, and then we're looking for a reversal. And then you've caught that wick. You've caught the wick. But the guy who's looking at price actions waiting for that wick to be formed. And then by the time it's formed, he's missed his trade. You know what I'm saying? It's interesting stuff. Come back into the balanced price range now. This is where I kind of expect price to get choppy. We're also trading below the value area. We haven't had a closure yet on the 1 minute, so there's a good chance this could keep dropping until the closure. We'll see. We've got 30 seconds on it. It's the IB25 level. So on single break days, this has a 70% chance of being hit. I just have a feeling that we might push into this area a little bit. Like I said, it doesn't really look clean for any continuations. The targets above look really nice. Like we're building higher. We've started to, rebalance some of this PA. I think there's a good chance that we could just rebalance 50% of New York's range and then probably distribute higher. But right now we're sort of in a balanced area where, the market's auctioning efficiently. So either we sell through this aggressively and we chop lower. And I think if that is going to happen, then 50% of New York's range looks good. You can see here now. Buyers trying to step in, sellers really in control. This is most likely going to continue. Potentially to the VWAP. We'll see. It should move quite quick. Well, as I said that. Market don't going Market going dumping and which level in currently have I'm not too sure. Is that a question? Or is that I'm not too sure what that is. It's all good though. But yeah, I didn't really expect us to sell off this aggressively, to be honest. But like I said, I think we've been through a massive consolidation period. It makes sense to have a breakout. Price must go lower in order to go higher. I feel like this is just a rebuild to eventually slowly grind higher again. I just wouldn't want to be trying to predict the bottom of this right now based on the gamma levels on NQ. There's the rebalance to 50% that we spoke about though. So that's sort of the reaction I'm looking for. I don't really want to see price get aggressive and discount because that'll really change my bias entirely. We'll see here. This could get nasty. We'll see. This could be an interesting area because we're trading at the VWAP and also core resistance. Sell efforts coming in. I feel like we could have a potential pop here. If let's see on the 1 minute close. Okay, the 1 minute's just closed. We want to see this reject, flip, and bullish. Yeah. Honestly, looks good for longs, I think, if we can get above this. Kind of aligns with everything. But again, for me, it doesn't make sense to enter. Although I'm confident in the idea of going higher, probability wise, it doesn't make sense for me to try catch the bottom of this move based on how we're moving. Although I personally currently think this could be the low of the move. We have a seller here who's not being currently rewarded, trading at the VWAP. Sell effort is kind of struggling. You can see buyers are just getting like easily pushing through. So you could position yourself something like this in this situation. So you'd wait for a nice closure above here. So this is how I'd align something like this. Well, currently it doesn't work. But for example, like you get a break above, your entry would be something like this. Your stop loss invalidation, you have to think this is a tick chart. So this is a very small stop. That's like a 5-point stop. So something like that is a completely fine stop loss. And then you're basically essentially saying you're bidding the auction higher based on selling effort not being rewarded, buyers coming in at a key level, the core resistance and also the VWAP. And then you'd look to target higher. But you can see that we didn't get the closure above this selling efficiency. And that's obviously like you need that sort of validation to show that sellers are not being rewarded and buyers are more in control. But right now it's balanced. And the reason why is because we've come into, again, another area where buyers and sellers are auctioning efficiently. And it's so easy to get caught up in this sort of chop. So easy. So there's that big buy you want to see. So this is where, again, you'd sort of look for the sort of continuation. Again, this candle hasn't closed, so it could close bearish. I also like to use like the 1 minute as a validation, like the candle closure of the 1 minute, because usually it'll create a bottom wick. So you can see that it created the bottom wick within the first 20 seconds of open. You'd want to see this flip and just continue bullish, potentially filling said gap here. That would be your potential break-even point. Again, the rejections off core resistance, a key level in terms of the gamma world. And again, a level where I would expect a lot of volatility and a reaction from price, But yeah, this is why I'd never look for a continuation this high up in the range because it's not in discount. You'd be looking for a continuation based on here because it's in discount with the range, lines up with everything, etc. So we'll see if this actually does get the flip higher. You can see sellers are really holding this area. We'll see if we get another breakdown. Again, because we're in a balanced price range, it's going to be, it's going to get like this. Does anyone else have any questions? Because I think the stream's going to cut soon. I don't really see any point in being here anymore. In terms of the market movements, they've already kind of happened today, earlier on in the session. But hopefully you guys have managed to take something away from this. I'll leave a couple minutes for any other questions or anything. And yeah, we can pick this up next Friday. Thanks so much for your help, man. Hey, listen, man, it's not a problem. It's been really nice meeting you. and yeah, hopefully we can connect again. Until next time, my friend. Anyone from YouTube, X, any questions at all? You're more than welcome to shoot them across. I'll give you guys 2 minutes. If not, I'll leave you guys to it. When's your next video coming? It's a good question. I'm kind of off the content side of things at the moment, mate. I've just been focusing on my own trading. I'll be back on content soon. I got a couple of things in the pipeline. Obviously, I'm rebuilding my studio, so once I've rebuilt everything, I'll have like a proper professional backdrop, professional environment to actually get on with the content again because I moved place. So yeah, it's been a lot of change. So I'm rebuilding it over the next 2 weeks, and then hopefully either next week or the week after I'll have face cam, so you guys will be able to put a face to the voice. I got quite a Yorkshire accent. If anyone's curious where I'm from the UK, a place called Yorkshire. It's quite a strong accent, so if you didn't understand anything I said today, then I do apologise. I might get McDaniel's to work on a translator. Yeah, I'm sure it'll work his magic. Cool. Right. I need to work out how to end the stream. So, everyone, it has been an absolute pleasure. Thanks so much for joining me today, and I hope to see you all next week. For those that have dropped me a DM on Discord, I'll get back to you shortly. I've got a couple of things to do this afternoon. Until next time, I'll see you all soon. Thanks for being here. Take care, everybody.